Hey traders, Raghee here. Welcome to Charts and Coffee. Happy Wednesday, everybody. We've got an active calendar for today, kicking off our sort of first week back, if you will, after the summer trading season. And we're kind of kicking off fall with all the FOMC speakers at some point. I'm only slightly kidding. We've got Powell tomorrow. But before that, we've got the opening act of Mr. Brainerd Barr today. This could foreshadow the tone that Powell has tomorrow. Of course, the beige book is sort of the cliff notes of what they're looking at in terms of the economic picture. So we have a lot coming up today, and that's all a precursor to tomorrow. Two huge events tomorrow. So why do we care about tomorrow, by the way? One of the reasons that I look at the calendar in the big picture, not just what's coming up next, not just, as they say, driving to the headlights, but beyond, is because if we know there's a major event coming up, a lot of times the market will kind of go into wait and see mode or just kind of shell up. And we have the ECB tomorrow, so arguably the second most important central bank, who is also in the very beginning stages of their tightening policy, their rate hikes. And then we have Powell 20 minutes before the bell. That shan't be boring. So that's what we've got coming up tomorrow. And this is the lead up that we see here today. As far as data goes today, not a lot. And you might say, Rob, do we not care about the Bank of England? Bank of Canada, the BOC? Not so much. Not really a big deal. Beige book, Mr. Brainerd, Barr, and then Powell tomorrow. So that's the mood of this market as we're taking a look at what we are inheriting this morning. Just a quick look at some of what we've got. And the question I'm getting, and I love the consistency in you all asking me, Ron, what is the market structure? When, if at all, are you going to go bearish? And I'll tell you what, gang, you will know pretty much the same time I do, because we get together for Charts and Coffee every morning, take a look at this pre-market structure Monday through Friday, and you will see that structure is going to change. That trend label, that trade flag has to go red before I will change my mind about whether or not we're in bullish chop, where we're waiting for an oversold slow stochastic, waiting for price action to get to a Darvis level, or whether we can start to short the rip. And I'm still in chop. I'm still in that choppy mode. So there's two things I can do. Wait until the buy signal on the daily forms. And that means we not only get to the oversold stochastic, which we are at already, we get to some sort of Darvis support and we form the pattern. Now, I taught you all this pattern week before last. If you go back to the Simpler Trading YouTube channel, which many of you are probably on right now, and if you're on my YouTube channel, head on over to the Simpler Trading YouTube channel and you'll see a video, something along the lines of my favorite Momo pattern, my favorite momentum pattern, which is a minor low and a minor high. Check that video out, because that's going to be a big part of how we will confirm whether or not we're seeing the momentum off the floor in the indices. And I am still focused on the floor. We're oversold. The trend that preceded this pullback was up. I am not calling for lower lows. Gang, that's clickbait. If I'm calling for anything other, and I don't even like to say I'm calling, what am I, who was that? Was it Babe Ruth that sat at the plate and pointed at? No. That's not what we do, right? What was that? What am I thinking of? It was a baseball movie, and they probably did it in Major League too. I love baseball movies. The Natural, Major League, they're all great. But that's not what I'm supposed to do here. I'm not supposed to sit at the plate and with bravado point to the bleachers. Uh, our job is to take a look at the current environment and ask ourselves, what would I do in this current environment? And is the setup triggering? If I start calling for anything lower than 11,000, now what I'm trying to do is just grab your attention by scaring you and pretending as if I know what the future is going to bring. We don't need to be fortune tellers, gang. I don't need to see the future in order to be a trader. What we need to do is accept the market that we're trading. I wish it was still an uptrend. I do. Um, accept the market that we're trading, make sure we're taking a consistent read on it, and then we'll see what comes next. All right. So with that, let's go ahead and jump into the questions. And first up, hey there, Zion Spear. How are you? Could we take a look at SRE and NEE, both within the XLU? Now, SRE, I'm going to, not that you asked me this, but I'm going to mention this in light of what I would do if we were in the mastery, Zion Spear. And that is, I'd look at the liquidity for the October 21 options in SRE, and they're relatively thin. I've also been looking at SO, a little bit better liquidity, and NEE. NEE is it does have, and I'm going to double check right now on my thinker. Oh yeah, NEE for October is fine. I like NEE. Not that no. So here's where we're going from structure to the reality of the liquidity that we need in order to trade the option on the stock, unless you're just buying the underlying stock, which is perfectly fine. One of the things I remind traders when we're setting up options, call options, is I don't want to be a buyer of the call unless I'm equally willing to be a buyer of the underlying stock or ETF. So this idea that stock trading is inherently different than options trading is actually incorrect. If I don't want to buy the underlying, why would I buy the derivative of? That's why I don't believe in any difference between, oh, what's your stock trading approach? You see it when I show you how I trade options. So I'm playing the derivative, but at that same zone, I'd be willing to buy the underlying. That being said, NEE looks pretty good, far more liquid. SO looks good. SRE looks good too, but the options chain is a little thin. Now, if we take a look at XLE, what does XLE allow us to do? It's going to be the tide instead of an individual boat. And that too, if I go out to October 21, little spotty, let's see, I would be looking at the 70. Yeah, 78s are plenty liquid. Yeah, they look great. So yes, across the board, defensive corner of the market. Not that that's indicative of my thinking about the overall market selling off and how I want to position myself in XLP or XLU, which is all fine. If risk appetite comes back, defensive corners of the market like XLE, XLU. Let me try that one more time. Defensive corners of the market like XLU, XLP will fare a little bit better if risk appetite stays away. But if risk appetite comes back, in other words, we see XLK, XLY start moving higher, these don't look quite as appealing. So think about how tech is moving. Not that these can't move with overall risk appetite, but they will fare a little bit better with some concern, with some risk aversion. So how do I find outstanding volume, high short interest? No, they just don't play a factor for me. I'll look at, when I'm looking at volume, Zion Spear, I'm going to look at volume profile. I'm going to look at how much volume is at each price level. I'm going to look at value area high, value area low, point of control. But high short interest is an environment. It's not a setup. In other words, if I know there's high short interest, there's not a price at which, or there's not a level at which all of a sudden high short interest is a setup. It's an environment in which we could expect a short squeeze, but we still need the short squeeze setup. That's one of the mistakes, I think, with looking at some of these internals, whether that be a put call ratio or a tick or a trend or high short interest. It's an environment, and knowing the environment is extremely valuable, but you still need the setup. So I hope that helps. All right. Thank you for the question, Zion Spear. Hey there, Sam. Have I ever used Renko charts in addition to Momo Trend and Slow Stow? I know what they are. Have I used them for more than a few months? No, I don't use them. And not that there's anything wrong with them. At some point, we all choose what we choose. And I get questions about Renko quite a bit because I think my grab candles resemble the Renko. I'm not really sure, but I get that question a lot, Sam. No, not for a prolonged period of time where I would consider it a core decision-making tool. No, but thank you for the question. How should we interpret a candle of unusual size? Hey there, Ryan, such as NQ at 7:35 this morning. All right, let's go take a look. Okay. Let's open up that 5-minute chart. You did say 7:35, right? Yep. So 7:35, there's your candle. Well, how do we interpret that? When that happens, so for example, when I'm in the sector sequence mastery room and we get a candle like that, there we go. First thing I'll do is take a look at the economic calendar. Is there anything that would have accompanied that time of day? You'll see there's nothing there. The second thing I'll do is I'll take a quick peek at what's going on, say, in the chatter about the market. Is there any kind of news bite that came out? And I believe at that time, roughly 2 hours ago, I think I remember seeing some kind of squawk about Russia. Anytime I see Russia, Ukraine, it almost doesn't even matter what follows next. We'll see reaction oftentimes in Natty. We'll see reactions in the broader averages because of just risk aversion. And I believe that was what we saw around that time. If we're in a neutral environment, my initial thought is, can I fade it? And you can see we landed. Gang, take a look at this. We landed right in the support of the HPMR. Normally what I'll tell folks to do, this is what I've told my members, because this is what I do. I'll switch on over to a 2-minute and see if I can form the pattern that shows me that we're pausing in that zone, because the HPMRs are going to plot in the same price zone on the 2-minute chart as they would the 5. So I'll switch to the 2, see if I can get that pause formation, and then that could be a potential buy. It certainly wouldn't be a short. If we sell off, boom, that candle of unusual size. Yes, a total Princess Bride reference. The COUS, that candle of unusual size should get my attention. Go to the 2-minute, look for the pause, only because we're both oversold, neutral, and in the HPMR green zone. So great question, Brian. That's the way I would process that. All right, next up, XLU is the only sector holding a move downward, neutral structure, holding a move downward. Julian, I'm not quite certain I follow what you're asking, my friend. Let's go take a look at XLU. And always let me know, gang, what time frames you're looking at, because that gives me a better idea of seeing what you're seeing. Only sector holding a move downward, neutral structure, but a defensible corner. Do I see a swing trade? Let me answer the last part, because I'm not really sure that I follow or even agree with a move downward. I mean, there's a number of sectors that are. So maybe you're saying that it's neutral inside the wave still. Anyway, I think I follow what you're saying there, Julian. Do I see a swing trade? That's a yeah. Yeah, I would actually be fine. But let's go back to, so I love sort of this follow-up question to Zion Spears' question. Julian, are there any, and I love that you're thinking in a defensive corner. So let's dive into that defensive corner a little bit more. Are there any double greens here? And that's where SRE, I think, caught Zion Spears' attention. And I can see where XLU caught your attention as well. I would say generally yes, but let's be a little bit more moderate to conservative about it. Let's be a little bit more moderate to conservative about it. So I hope that makes sense. Next up, it's me, Claire, asks, what is a good percentage volatility for options trading? A good percentage volatility. Claire, I don't know. I don't look at that. Are you talking, say, IV percentile or implied volatility? I don't look at that. It's me, Claire. Yeah, I don't know, because I don't look at it. But I love that you're asking about volatility. What we want to remember with volatility is don't pay for it. you always want to profit from it. So that means if you're an option buyer, finding quiet volatility times or finding momentum in the opposite direction of your option. So bearish in calls, bullish in puts, and then again, not paying for volatility. Or if you're selling premium, how do you take advantage of volatility? So volatility is going to depend, which side of it you're on is going to depend on whether you're an option buyer or an option writer. But I don't look at a percentage, Claire. Yeah, cool question, but I just don't look at it. It doesn't seem to be a needle mover for me. I don't know that it maps to a better trade as long as I'm familiar with what's happening now in the environment that I'm buying the option and whether or not the overall environment is chop or trend. That seems to take care of it for me. Hey there, Nick. Good morning. What's my advice on how to create a written out trading plan? What's my advice? Well, have one, right? So I love the question you're having. What element should it include? What's the underlying structure of the market for that time frame that you're trading? What you want to buy, when that buy is valid, percentage risk to the account, stop, target. I mean, really, that's it. Do I ever write one? So when I first started trading, a lot like everyone probably in this room, you got inundated by different trading journals, which sometimes these trade plans might have 12 questions. And if we're trading weekly or daily time frames, we have the time to, dear diary, Apple is in an uptrend and I really want to buy it. I'm only slightly kidding. I believe it's far better to take a snapshot, Nick. Take a snapshot. That's what I did for years. I took a snapshot of the way the chart looked when I made a decision to trade it. They say a picture is worth 1,000 words, a chart's worth 10,000. Take a snapshot, maybe annotate it, save it. That's what I think the best type of trading plan is. And on that chart, highlight the zone you want to enter in. That would be your triggers, aggro, moderate, conservative. Where is the paper cut stop loss, if that's what you're using? Where's the point of validity stop loss, if that's what you're using? What's your first target, maybe your second target? You can also write out somewhere or put in the notes on the chart what the cost of the option is and your position size and the overall risk to your account. That's always what's on my mind. And however it speaks to you, whether to write it out or capture a chart, I think those would be the pertinent things to know. Did I ever write one? I probably spent about 3 to 6 months doing it until I realized it's ridiculous and really way too time consuming, and that it served me so much better to take lots of snapshots of the charts that I am trading. Before, during, after, it really does help, I think, more than even writing things down. All right, next up. Hey there, Robert. Thoughts on PXD and OXY? If there's any corner of the market that still seems to be hanging on to a trend, it seems to be energy. It seems to be XLE, XOP, FCG, the stocks within them. Natural gas, I know, got rocked, but I'm still bullish natural gas overall. Also, hey, my Sector Secrets Mastery folks, we're going to talk some energy today. What's going on with crude? Did the Darvis hold? Is this still a neutral market? I think most of you who've been following Charts and Coffee will say, Rog, probably not. I'm with you. There was a lot of talk after this rally that, the bottom's in on crude. Don't fight a downtrend. And even when we transition to chop, we need a 1, 2, 3. If you don't know what a 1, 2, 3 is, yesterday's free video, I talked about a 1, 2, 3 on the weekly time frame, but it's the same thing on a 5. It's the same thing on a daily. It's the same thing on a weekly. And I showed you all how to get the write-up. Trish did an awesome write-up on the way that I trade down 1, 2, 3s, reversal down 1, 2, 3s, continuation down 1, 2, 3s. I think there's 4 or 5 write-ups. It's my favorite pattern. I think there's no pattern better than a down 1, 2, 3 to look at the transition from a trend to neutral to reversal of trend. So check that out. That's not what's happening on crude. It's too bad because I would have really liked to have bought some crude and maybe some oil stocks. Oil stocks may still be from a relative outperformance standpoint, but this is what I've warned everybody about crude, and we'll end on this note. And thank you for the question, Robert. if we have a lack of clarity or a lack of agreement on the trend between the underlying commodity and those commodity stocks, think oil stocks, natty gas stocks, gold miners, right? If there's a mismatch in trend, the stock of those commodities so crude oil stocks are likely going to suffer and track with crude at some point. Okay. And I think we might be seeing that right now. All right, gang. So that's it. Thank you as always for joining me for Charts and Coffee. I'll see you tomorrow. Same time, same station. Sector Secrets Mastery folks, heading over to the room right now. We'll do our Q&A, day trading, swing trading, watch list discussion. We're still just getting into the early part of the fall trading season. Still a little summary. A lot of FOMC speakers this week. So it's a little challenging, but we'll definitely find some clarity in this market. Be good to each other, gang. I'll talk with you soon.